Hi, this is Justin from Money Bootcamp. Today I'm answering a personal finance Friday question from one of our Facebook fans. The question today is, I'm interested in buying a house. What should I do? So this is someone who's been renting for the last few years. They're a little bit worried about rising rents and also rising property prices. But at the same time, she doesn't know much about property or what to do next, so has asked, what are the next steps to do? So before you get into property, you need to ask yourself a few questions. Does it suit your lifestyle? Are you someone who is going to be staying in one area for the next few years? If you're someone whose job or your lifestyle means that you're going to be moving around country to country and you're not often in the one place, maybe it doesn't make sense for you to actually buy a home to live in. However, if you're someone whose job is relatively stable, relatively risk-free, and you're going to be in the one area for years to come, a property can be a great thing to buy. You also need to ask yourself, is it in line with your other goals? So if your goals are to travel, to move around the world, to move around different parts of the country you're in, to move around different countries, again, this might be something where you actually say, maybe I'm better off renting than buying property. However, again, if you're someone who is nice and secure in what you're doing and where you're living, if you want to travel, that the only travel you want to go on short trips, it can still be great to get a property for yourself. Next thing to do is think about what type of property you want. So is it a house? Is it an apartment? Is it a duplex? What kind of property are you interested in getting? How many rooms should it have? What type of amenities should be in the area? Is there a specific location? Is there a city you work in that you want to be close to or close to your family at home? Are there certain requirements that you need in this property for your lifestyle and for your goals? When you think about this, you can also start looking at what kind of price ranges you would see for property that meets the requirements you're looking for. So if it has the amount of rooms you need, if it's a house, what type of area it would be in. Is it close to your family? Is it close to your friends? Does it have the amenities you need? Is it close to work? Once you start hitting these requirements, you're going to start being able to figure out what kind of price you would need to be paying for a property that meets these requirements. Once you know what you want to buy and what you're interested in getting, you need to ask yourself, what can you afford? Okay, so some of this is specific only to people in Ireland right now at the start of 2018 because it's just the numbers, but some of the general ideas will also be applicable for people outside of Ireland or past this moment in time. Right now, as of February 2018, the central bank has some rules in place about borrowing to buy property. So if you're looking to buy a property, as a first-time buyer, so you've never owned any property before, you would need a 10% deposit to purchase a home. If you have owned a property previously or you currently own a property, you actually need a 20% deposit to be able to get a mortgage on a home. The central bank also has an earnings requirement, so you cannot borrow more than 3.5 times your income. If you're a couple, you can borrow 3.5 times your combined income. What this means for you is if you earn 50,000 euro, you can get a mortgage of 3.5 times this, so 175,000 euro. If you are a couple and you have a combined income of 80,000 euro, you can get a mortgage of 3.5 times this of 280,000 euro. Combining the limit you can borrow to under the central bank rules and the deposit you would need, you can figure out how much money you can borrow to buy a house. So you then get your upper limit of a price range. You can still buy any homes or property that fit this requirement that are lower than this cost, but that's the upper limit according to the central bank rules right now of 3.5 times earning and 10 or 20% deposit depending on your situation. The other thing to consider on this is who you're going to get lending from. So whether this is a bank or financial institution that offers mortgages. The first thing they're going to look for is that you meet the central bank rules of the deposit percentage and also the earnings rules. So you need to make sure you're going to be able to afford based on these rules. The second thing that lenders look for is affordability. So they need proof that you can actually afford the repayments of whatever loan they're going to give you. So how you work out this is you look at your expenses, your savings, and your rent if you're paying it, and figure out, can you afford what your repayments would be? If you look at the mortgage you're going to get, and say your repayments would be €1,000 per month as an example. If you're currently saving €1,000 a month, you can afford this. If you're also paying rent right now and saving €1,000 a month, so say your rent is €500 a month, the bank can see, or the lender can see, you can then pay €1,500 per month between your savings and your rent. So you can afford the €1,000 that your mortgage would be. With this, you also want to give yourself slack. The lender needs to see that you can minimally afford to pay whatever the mortgage repayments are going to be. So you also want to give yourself a little slack that you can get approved, but also that you can still live a comfortable lifestyle after getting a mortgage. What I mean by this is that if your mortgage repayment is going to be €1,000, you want to make sure that you can afford much more than this. So if you can afford €1,500 or €2,000 a month after this, then you know at least you can definitely afford to pay your mortgage. Once you meet all these requirements, you want to get yourself down to a lender or a bank and see if you can get pre-approved or approved for a mortgage at whatever amount you're looking for. Once you do this, you're going to need to think, are there any trade-offs required? If you have been approved for a €200,000 loan and you're looking in houses that are ranging from €150,000 to €300,000 on price, you're going to have to start thinking, okay, I can't afford the top range of what I'm looking for, so what can I do to lower some of the requirements to bring it into my affordability? In your circumstance, this might be moving slightly further away from where you were initially looking at. It could be looking for a smaller house or apartment. It could be looking for less rooms. If you said you wanted a garden, maybe you don't get a garden. Maybe you just take out certain things that would bring the value up. You might have to make some trade-offs and say, okay, I would have liked 3 bathrooms, but if I get a 2-bathroom, that is going to knock 50,000 off the price of properties I'm looking for and bring it into my affordability. So see what you can afford, see what the bank approves you for, and then make trade-offs needed as required. After this, you want to get out there and start looking. So talk to property agents, look on websites like Daft where you can look for different properties that are up for sale, and then just start looking around areas. If you just drive around the areas you want to live in, you can often see signs up of for sale, or if there's new developments, you also might be able to see signs about this. That is our personal finance Friday question on what to do if you're looking for a home. If you enjoyed this video, please like and also share with anyone you think would also get some value from it. You can send us any other personal finance questions you have and we'll put new videos up each Friday. This has been Justin from Money Bootcamp. Learn money, live better.